You are welcome back to our class, Collins tutorial. Today we happy new year and welcome to 2025. It's our first video for the year. Today we are based on a requisition from one of our followers to help prepare a trading profit and loss account alongside the manufacturing account. So we have a question on our board where we are asked to prepare the manufacturing account and we are also asked to prepare the income statement. The income statement can also be doubled up as our trading profit and loss account or the final account of a sole trader after an accounting year. Manufacturing account is actually the account that is prepared in order to account for the cost of production of goods. That is how much was invested in converting those goods from their raw material, from their raw state into the finished state. Now, why the finished goods is the amount that is realized when goods are sold and converted to monetary aspects. These are our questions. We've been given the opening stock. We have our raw materials, work in progress, finished goods, and in our closing stock, we have our raw materials, work in progress, finished goods, and all of this. Mind you, in all of these particulars, we have particulars that will go strictly to the manufacturing account, and we also have particulars that will go to just the trading account and particulars that we feature in our profit and loss account. Now, the essence of the manufacturing account is for us to ascertain the production cost, and the essence of our trading account is for us to ascertain if the business is making profit or loss, the gross profit or gross loss. And the essence of our profit and loss account is to ascertain if the business is making a net profit or net loss over a given period of time. That is the accounting period. Now, take a look at this. In all of our particulars, there's something I always like working on before I start posting. When you are given figures in percentage, example, we have wages. 75% production goes to what which is our direct labor, which is wages in terms of the manufacturing, and 25% goes to office. Salaries, 30% goes to production, 70% goes to general administration. You can actually work this out first for you to know the figures that go to manufacturing and the figures that go to the trading profit and loss account or the income statement. Or when you are posting into the income statement, you can outline your workings in order for the auditors or the users of accounting information, the management, to be able to have good idea, understanding of how you arrive at that particular sum or figure. Now let's go straight into our posting. Now I have my manufacturing account. I will run my debit side. Now, one of the rules of accounting is that your lines should always be straight. So make sure when you are answering questions in accounting that you use straight lines, okay? It makes your work look presentable. All right. In this place, I'm going to have my particulars, my debit, and my credit. So we are starting with our manufacturing account. We always start with the opening stock. Now, under the opening stock, I only pick particulars relating to manufacturing account. So I have opening stock in raw materials. I have my opening stock of raw material. Pardon me to use abbreviation. Opening stock over here, I have 69,400. Now I'm going to check if I have purchased raw materials. Yes, there's purchases of raw materials, which should give me I have purchase of raw material. And the purchase of raw material, I have 1,682,500. Now, I'll add the carriage inwards, which is the cost of conveying these raw materials from the point of purchase to the factory. So, carriage inwards, it's carriage inwards is 71,400. Now, I'm going to add these sums together. When we add together, I have 69,400 plus 1,682,500 plus 71,400. That will give me 1,823,300. Now I'll check if I have return artworks. Yes, there is return artworks. That is the goods that did not meet to the standard, that did not meet to our requirement. Maybe they are spoiled, they are bad, or they are past the usable date. So I have to return it back to where I got it from. So I have return artworks. And my return artworks is what? 25,300. 25,300. Now, if you've been following me, you always know that in accounting, any number you are subtracting will always be in bracket. Parentheses. So this will give me minus 25,300. This will give me 1,798,000. Now, this is what cost of raw materials available. So we can say raw materials available for use. Now that we've gotten our raw materials available for use, the next thing is to less the closing stock of raw materials. So closing stock of raw material. And what is my raw material? Closing stock 73,700. 73,700 in bracket. Now minus 73,700, which will give me 1,724,300. Yeah. Now that we've gotten this now, the next thing we are going to look at is if we have direct labor. Direct labor has to do with what? The cost of labor involved. You know, labor has to do with all human effort put geared towards production of goods and services. So is there any labor that was incurred in what? Conveying the raw materials and bringing the raw materials, converting it, all of this. So if there is, we are going to subtract it. Now that is what we call our direct wages. So yeah, I'll add it, because it also forms the cost. Direct labor. Now, if we come here, we have what we call wages. Yes, wages, 75% production. So I'll have 75% is 75 over 100 multiplied by 236,800 over 1. So that will give me 75 multiplied by 236,800 divided by 100. This will give me 177,600. So if we add this will give me what? Plus 1,724,300. Once we add it, it will give me 1,901,900. Now this figure becomes what? Prime cost. Now it's becoming our prime cost because from this transaction we did not incur anything like direct royalties. Royalties were not paid for goods, so this will become my what? My prime cost. Okay, prime cost 1,901,900. Now the next thing we'll do is factory overhead. Now, factory overhead has to do with what? The expenses that were incurred in the factory. Now, anything that has to do with expenses in manufacturing will go into this factory overhead. Now, we'll come down. I have purchase return, sales return. Okay, I have salaries. Now, mind you, we have to calculate this. It's 30% of production, so it will give me 30 over 100 multiplied by the cost of salary, 401,000. Now, over 1. That is because of the percentage here. So I have 30 multiplied by 401 divided by 100, which will give me 120,300. Okay, now the next one is factory power. Factory power is 98,700. Depreciation on plant and machinery. Okay, this goes straight. Depreciation on plant and machinery. Plant and machinery 66,600. Okay. The depreciation on other fixed assets. Other fixed asset is not recorded in the manufacturing account because it has to do with finished goods, conveying finished goods and other things used in the office. Audit is performed on finished goods, not on manufacturing. Office expenses goes to the office. Rate and insurance. We have rate and insurance. Rate and insurance. Now, rate and insurance, we have 40% for factory. So this will give me 40 over 100. Multiplied by the total is 36,000 over 1. So I'll find 40% of 36,000. 40 times 36,000 plus to divide by 100. This will give me 14,400. Alright, just to be sure, yes. So I'll add all of these. Now, once I add this will give me total factory overhead expenses. So I have 14,400 plus 66,600 plus 98,700 plus 120,300. That will give me 300,000. Now, in my 300,000, I'm going to add it to 1,901,900 plus 1,901,900, which gives me 2,201,900. Now that we are here, we are going to our work in progress. So we have opening work in progress. Work in progress is 13,800. We'll add that plus 13,800, which will give me 2,215,700. Now, I will subtract closing work in progress. My closing work in progress is what? 15,700, which is 15,700. Subtract. Now, if I subtract that, it will give me 2,200,000 because this nullifies this 15,700. So this will give me 2,200,000. Now, this becomes what? My production cost. Now, this is my production cost, meaning that it is the amount of money that the company spent in converting the raw materials into finished or semi-finished goods. Now, this is the amount of money that will be carried into our income statement. Now, we are done with the manufacturing account. This will then be my income statement. So I'll drop same style I use here. I'll use it here. So I'll start with my sales of finished goods. So I have sales. And my sales of finished goods is 3,464,000. So this is 3,464,000. Then, if there is return inwards, that is goods that are returned after sales have taken place. Yes, return inwards. So I have my return inwards. So my return inwards is 48,200. So this is 48,200. I'm subtracting that. So I have 3,464,000 minus 48,200. That will give me 3,415,800. That means this is the cost of goods that are sold. So I'll start with my opening stock. Opening stock of finished goods. We'll start from there. Our opening stock of finished goods is 103,800. Now, we did not buy any additional goods to add with that, so we are not putting that. Then you are bringing this production cost, you are adding it to the opening stock. Do we understand? So this will be production cost, which is 2,200,000. 2,200,000. We'll add this together. Since there is no purchases, definitely, as we don't have purchases of finished goods to add with what we produce from our factory, meaning that there will not be any form of return outwards or carriage inwards in terms of the income statement. Now I have 103,800 plus 2,200,000. That will give me 2,303,800, which is cost of finished goods available for sale. Now that we've gotten our cost of finished goods available for sale, what do? We less the closing stock. Closing stock of finished goods. Permit me to use abbreviation. Now, my closing stock is 101,900. 101,900 in bracket. minus 111,900, pardon me, which will give me 2,191,900, and this is what cost of goods sold, cost of finished goods sold. Now we subtract it from here because this is higher. So I have 3,450,800 minus 2,191,900. 3,415,800 minus 2,191,900. Yes, he gave me 1,223,900. So this will be what? My gross profit. So meaning that we make gross profit. Okay? So if I add this to it, must give me this 0, 0, 9 plus 9, 18, 8 leave to 1, 4 plus 1 is 5, 9 plus 2, 11, 1 take 1, 3 plus 1 is 4, 3 plus 2 plus 1 is 3. You see that he gave me the same figure, meaning that it is correct. So I'll just close my account. Now, anytime you close with double line, it means you are done with that particular account. Now, why I'm closing with this account is because if you are asked to provide the gross profit, the trading account, this is where you stop in terms of our trading account. Meaning we are done with our trading account. So the next thing is we are going to what? We are going to our profit and loss. Now our gross profit will be brought forward here. So we have gross profit brought forward, which is 1,223,900 in terms of our gross profit brought forward. Now, we don't have any discount received or commission received. So assuming there is discount received or commission received, we will feature it here. But because we don't have that, we'll go to all expenses. So this will give me office expenses, meaning every expenses that was incurred during this transaction. I'll enter them here. So I'll look for my expenses. Wages, good. So we have wages. Wages, remember there's percentage, so we are taking only that of the office. We are taking only the percentage of the office. We've used 75% for manufacturing and those for the office to 25%. So that will give me 25 over 100 multiplied by the total amount, which is 236,800 over 1. Now, let's do this quickly. I can just say 236,800 multiplied by 25 divided by 100. That will give me 59,200 as wages incurred in our office. Then we have salaries. Salaries, remember that production took 30%, so our office will take 70%. That will give me 70 over 100 multiplied by 401,000 over 1. So this will give me 70 multiplied by 401,000 divided by 100. This will give me 280,700. Now, factory power goes to manufacturing. Depreciation of plant goes to manufacturing. Depreciation on other fixed assets goes to our expenses incurred. Now, remember that fixed asset on itself is not an expenses, but the depreciation which arises as a result of wear and tear. Depreciation which arises as a result of wear and tear goes into expenses in our profit and loss account. So I'll have this depreciation on fixed asset. Most times, depreciation will always be given to you. They will give you calculation percentage to calculate in terms of the depreciation. Now, when percentage is given to you, you will calculate it and subtract it from the main figure. But in this instance, it has already been calculated, so we'll just take the figure as it is, 81,500. So I have my 81,500. Great. So we proceed. Audit fee. Remember, I told you audit fee is coming straight to what? Profit and loss. It is an expenses. It is the amount of money you paid the auditors in order for them to carry proper audit on your record and goods available. So we have audit fee. Our audit fee is 63,400. Great. Now we have office expenses. Our office expenses is 55,900. Then rate and insurance. Rate and insurance. There's percentage. So we calculate our percentage for office 60%. So we have 60 over 100 multiplied by it's 36,000. 36,000 over 1. Now I have 36,000 multiplied by 60 divided by 100. That will give me 21,600. We're making progress. We have 2 more. Advertisement, straight to profit and loss. So we have advertisement. And the cost of advert is 105,000. So I have it here, 105,000. Then the last thing, we have travel expenses. It goes to work under profit and loss. So we have travel expenses. And our traveling expenses is 156,600. Now add this to give me total office expenses. So let's add 59,200 plus 280,700 plus 81,500 plus 63,400 plus 55,900 plus 21,600 plus 105,000 plus 456,600. That will give me 823,900 as what? As my total office expenses. So from here now we determine if the company is making profit or if they are running at a loss. Now once this amount is lesser on the debit side is lesser than the amount on the credit side, it means they are making profit. So as you can see, 823,900 is way lesser than 1,223,900. So I'm going to subtract 1,223,900. Then I'll subtract 823,900 from it, which will give me 400,000. I'll add it here. Meaning, this is my what? This is my net profit. So now that we've ascertained our net profit, meaning the company made a profit. So we'll add so 0 plus 0 is 0, 0 plus 0 is 0, 9 plus 0 is 9, 3 plus 0 is 3, 2 plus 0 is 2, 8 plus 4 is 12, which gives us 1,223,900, meaning it is correct. So we just close our account once more. Like I always say, make sure your work is neat. Make sure your closing is neat. So that is my closing. That brings us to the end of our lesson. If you have any question, don't hesitate to drop it on the comment section. I'll be looking out for the questions and getting back to you, reaching back to you. Like I always say, we are here to make accounting easy, understandable, and something that you can always process anywhere you find yourself. So once more, don't forget to like our channel, subscribe to our channel, turn on the notification button for more live updates, and also share our channel to other persons that you think need this knowledge and this knowledge will do them good. Thank you for watching to the end. I hope you understand, and I hope the manufacturing account income statement or the trading profit and loss account have been simplified for you. Thank you.